The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, come on back here to the Diagnostic Trading Hour. Let's check out where the markets are at right now, right here on TFNN for your lunchtime update. We got the S&P is currently just slightly positive, up a couple points right now. We got the Russell is up 30 cents. Dow is up a mere 35 points on the day, with the Nasdaq up only 4 points on the day. So really quiet in the U.S. indices compared to yesterday's settlement at this time of day over the last week or so compared to what we have had. Going on into the metal markets, we got gold setting down a little over 7 points right now. We got copper is slightly down 0.0785. And let's hop on into some energies. We got oil right now is down almost $1 on the day. And we got natural gas as well. So let me pull that on up. We'll talk about it. And natural gas is currently down 0.054. So both of our metals moving down. We got ags moving down 2 points on corn and almost 10 points on soybeans. Bonds are moving up. King dollar getting strong today, up 1.15. DX up 0.529. And that hit the currencies, the dollar currencies there. Euro dollar currently down 92 pips. We got euro yen is down 5. Euro pound down 38. Pound dollar is currently down 35, with pound yen up 113 pips. Dollar yen is up 90. Aussie yen's up 39. Aussie dollar is down 34. Dollar franc is currently up 51 pips. Dollar CAD is up 50. So that gives you your daily lunchtime market update. Okay, so now that we got you update on all that, let's check out what's going on with the news. We talked about the news coming into today, but we also want to make sure you have your plan ready for the rest of this week and going into next week. And then after that, we'll do some more lessons and such on spreads and binaries and more of that fun stuff, and we'll sort of see where the show takes us, okay? So today on the 11th, we had several various reports come on out. And again, it's not always going to hit the exact price that you're looking at. If it can simply go in and actually just move that expected range, sorry, let me put it a different way. It usually does move the expected range that we're looking at. It may not always have the premium for the trade that we want. And so several traders have asked me, they're like, hey, we're looking for 35 pips on this one. We could only get, 15 or 20 or 25. Okay, you can either skip the trade, which is honestly usually the best idea, okay? Or you can try to leg into the trade as long as you have enough time before expiration. If you get too close to that expiration and you don't, or that announcement, time before announcement, that was what I meant to say. If you have time before the announcement, you can try to leg into the trade, okay? But, be careful on that. Don't just hop in on a trade just because you want to put the trade on, all right? Yes, if you can get it on, more often than not, the trade works out well on many of these neutral iron condor trades. But, again, don't force the trade or you're not putting on the right trade. That's like a market saying buy and you selling, okay? So it may work, it may not, but that's not the trade. So you definitely want to make sure that what you're doing will allow you to go in and follow your plan. And one of the things I try to remind traders of, I was taught this, one of my first lessons that I was taught as a trader was you get to choose your entries. You don't really get to choose your exits. I mean, you can decide when you want to exit. You don't get to choose which way it's going to go on that exit. Okay? So again, you can choose your entries, but you do not get to choose your exits. And I think that's such a valuable lesson as a trader to never forget that. Because, that's the one piece your size, obviously, that you trade, but that goes along with your entry because you got in with that size. And you have control of it. So if you just hop in, okay, and you don't exercise that control that you have access to, then you're giving up basically one of the powers that you have as a trader, which is to control. One of the only powers you really have anything over is controlling that entry. So do not force the trade. If it's not there, just don't take it, okay? And one of the most important things you can learn as a trader is just to not force the trade. If you miss it, you miss it. If it's not there, it's not there. Follow your plan. You lose money because you didn't follow your plan, that hurts. You make money because you didn't follow your plan, that hurts worse. You know why? Because it rewards bad behavior. And bad behavior can be very, very expensive in the world of trading. And let's go on over here. Looking at the various reports, so we were talking about 7 to 9 being the trades that we were looking at. And let's see. Go 7, and we drag that over to 9 o'clock. So one more bar gets us right there. Let's zoom in a little bit on that. Got a mere 5 pips of movement on that trade. Okay, so it was like a non-event. It did have a pretty good move. Okay, it moved pretty big, but it came on back. So if you enter for that 9 a.m., I mean, it flew down and it flew on back. So there's a lot of ways to trade it. I mean, you can even go in on the volume spike and you can fade it. That's a way to trade it. Because we only expected a 35 pip move on the trade. And now at the end of the trade, we still got what we expected, which is the most important part of an iron condor. But it moved down like 86 pips and flew all the way back up. Okay? So the trade did work out if you got the premium on, because when it came back, you still netted 30 bucks. Now, if you didn't have the premium, if you couldn't get the trade on, then you didn't lose anything. You didn't go through a drawdown. And obviously at the end, you didn't make anything. But you didn't force the trade. And so that seems to be it's a very simple lesson, but it's, like I said, that's one that I hope that you hold on to. I know some traders were trying to look at Aussie dollar last night. And, of course, whenever you're going to do these nighttime trades, you really got to be looking to as early as possible, like 6 o'clock early, and see if they're there. And we had some pretty big pops in the market this past evening. So if we go back and we look at these trades here, we were looking for like a 6 to 11. And let's see what happened on that 6 to 11. So 6 o'clock right here. Right there. Take that out to 11 o'clock. And let's see how that panned out. Right there, 30 pips. So, how much did we say that we wanted on that trade, on that Aussie dollar trade? We said we wanted 35. That means you would have made basically 5 pips on the trade. And it flew down and it flew up. Now, that's that legging in. That can sometimes work, sometimes can go against you. But that legging in was going in on the trade. You could have went in and you could have, whatever side you could have got. Let's say you could have got we'll just say the long side on, all right? And then it pulls back. Then, of course, easily you could have got the short side on. Or if you got this, you couldn't get either side on because both were just too cheap. Neither one was at least at 15 bucks or more type thing, because you want $35 total. Pulled back, you got the long, then it flew up, you got the short, and then it settled back down. Maybe got even better fills. Who knows? But so legging in is one method. It's just dangerous because if you get that one leg, you don't get the other, then you don't have as big of a zone as you would like. But it is a way, more of a, when IV starts dropping, that's sort of, a lot of times you do have to start legging in on those trades. But work how to get them without legging in, and you don't just have to do these on news. This is just a getting started iron condors. So you can go in and you can add on expected ranges, and you can really start making iron condors at any time of day or night with the expected range calculator. You can calculate it for 5 hours from now, 9 hours from now, 20, whatever hours from now, 23 hours from now. And you can look at them and start making them. That's just your getting it started point. And let me see here. What else do we got on this list? We got PPI. Let's check out our PPI. And on the PPI, we got that coming up tomorrow morning. Okay? So with PPI coming up tomorrow morning at 8:30, so we'll be looking at a 7 to 9 entry for a $25 minimum take profit. So it's getting a 7 to 9 entry for a $25 minimum take profit on that trade, meaning we're going to buy the lower spread. We're going to sell the upper spread for a minimum of $25. Okay? And that's going to be on the euro dollar tomorrow morning. Now, today we had natural gas. Let's go check out natural gas. We'll pull that up. And let me make sure I'm on the current contract. I obviously did not trade this one today, but it can be a fun one to trade. Let me get that rolled over real quick. Just looking at the chart, we can tell there's not enough prints on there. And where is it at? Let's look it up because it looks like it's trying to be that. But let's go on over to. Why am I trying to go to Facebook? No, we want to go over to CME. All right. On CME, go in and check out energy. And on energy, we're going to go down here. We're going to go down to natural gas. Maybe it's just that wide of volume today, which would be unique. But we're going to go on down here, and we'll click on the Henry Hub natural gas. Go to the quotes and see it's on July. So since it's showing us June, we're going to move it over. We're going to move it back, and now we'll get the July contract. We click OK. You can see the volume is right there on July. So let's just know that's the front month, the liquid month, the one with the tighter bid offer. Okay. And so now we're going to change our chart up. We're going to switch it on over back to natural gas, but look at the July contract. The biggest way I need to look at that, I just saw all the gaps in pricing, and I saw very little lack of movement, which means, hey, my chart has dead data on it. So it's not going to be useful to me. Now we open it up. Now we actually see the big move on it. Let's see if that move, let's see if it's larger than normal or pretty regular, because we really didn't have a lot more volume than we normally have on that trade. We'll look at that when we get back. Stay right there.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And so we're going in, we're looking at this natural gas move and checking out what kind of move that we had. And you can see it really did not move that far compared to the normal move that we have on Thursdays. It was a pretty small move. When I didn't have that on there, the move looked huge. Now it is starting to move on down, get a nice trail down, but overall, really not a big move, okay? So, want to make sure that, you do understand that, understand those expected ranges is incredibly helpful. It lets you see if an iron condor, maybe you're looking at that, is good or not good, okay? It lets you see, okay, now that maybe that news is over, maybe implied volatility is still high. Is there still a good iron condor on this market or on another market? What is the expected range now till the end of the day? So a lot of things you can look at. So we're sitting right here, and this is just a random example, but we're sitting here at about 2:30. So let's say or 12:30. We say we know we want to maybe look at one that's going to expire at 2:30. Okay. When we go in here, and we make our expected range. We can update it to 120 minutes. So, because if we got in at say 12:30. Then that'd give us 2 hours to be able to hop in on the trade. Okay? So, but now we need the thing to start at 12:30. So let's go ahead. It's starting at 12, the expected range right there. So let's go ahead and let's bump it forward. Let's offset the most recent one that just started. We need to move it up to the time that's coming up. So 30 minutes from now. Okay? Click apply. And then when we back the chart up a little bit, we're going to be able to see that next expected range that's about to come up here in 30 minutes. It's really small, actually. So 2857 to 2800. So now we're going to go see, is there There may or there may not be, okay? But is there a condor that we can use? And let's see here. Pull this up. I'm going to pull up natural gas. Just give me 1 second. And then we're going to figure out, how do we know if it's a condor or not with that expected range? Because basically, is it expensive enough or what? Okay. Doing well in some trades today. Let's see here. Wow. Okay. Sorry. Just woke up to that there. Let's see. Okay, now let's go back in and go in on this. Gotta get this to connect. Okay. That ought to get that to connect in. And now let's go in, and I just really want to pull up natural gas, so let's pull that one off and look at it. The new toy we're working on here, natural gas. I just have to get used to where everything is located. Okay. And let's see here if I can get it on there. Doesn't want to seem to be opening up natural gas for me. There we go. Now that will give us what we want to look at. Okay. So we're going to look at natural gas on the spreads. And what I want to see is, is there anything where I can put on an iron condor? And what I can tell you right now, the answer is no. So just really quick for you, I'll save you some time. How do I know so fast? How do I know so quickly? Well, I'm looking at premium, and there straight up is not any. Okay? So basically just knowing that there's not any premium right here. I mean, we have like a couple ticks of premium, but overall, there's just not enough premium to make any of the trades worth it. I can't buy. Now this is one of the big keys that I'm finding, that, you know, sort of the thing that catches traders where they feel like they're lost and spreads are mysterious and they don't get it. We're going to talk about that one simple thing that can literally turn this around for you and help you understand these quickly and easily when we get back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right. Okay. Coming on back, checking this out and looking at everything. And going through looking at natural gas. What I want to talk to you about is, there's one easy way that I can identify this, whether or not it has an iron condor. And that is premium. And premium is very easy on some of the updates we're doing on the new scanner, okay? Because it actually shows you how much the premium is that's available if there's any available, okay? And so once you learn that, then you're able to go, oh. So I just look at premium over here. And if it's a positive number, then I have a potential iron condor. Now, why is there not one right now? What's up with that? Well, we're not near a floor ceiling. We're at 2830 right now. Notice these are 2900, 2500, 2400, 2700, 3100. Okay? So we're not near a floor ceiling. The closest we got is like 20 points away. And if we were there, there'd be a little bit, but, the expected move, the big move has come out of the contract already. Now, what about before the announcement came out? Well, the announcement comes out right over here at 10:30. Okay, the market was, we got about a 28.86. We had a 28.50 right there. So you could have found a potential premium one trade right there. And you could look at the prices and you could say, hey, where did it go? What did it do? And, where is it expected to move to? And so if I could sell it up here and buy it down here, and if my break even was at the ranges or close to it, the expected moves, then I have myself an iron condor. So that's what I do is I use those expected ranges, and then I also make sure there's premium, okay? So if there's premium available on anything, look over the expected ranges. I go, okay, well, what would be my break-even distance? I draw that on the chart. It's pretty simple. Just combine your two max profits together. It can go up and down on the trade as long as you have premium on both sides. Okay, otherwise it's pretty pointless, and you want to build you don't expect to make more than that max premiums on both sides when you're doing a neutral trade. And then you'd go out and you'd buy a lower contract and you'd sell an upper contract, and then you'd let time decay do its thing. Okay. So that is how premium collection and iron condors work over on Nadex spreads. And again, all you got to do is understand what that premium is, and the key to understand that premium. Okay, the biggest key, usually the aha moment when I'm trying to teach this to somebody, is the understanding that they are buying or selling at a different price than where the market's currently trading. Okay, let me say that again. They're buying or selling at a price different than where the market is currently trading. So let me show you an example on a different market. Okay, let's go look at NASDAQ. And I think this is literally the most important lesson that I'm finding. And just as I teach more and more, and they're confused, and I'm like, all right, let's work through it. Let's figure out where the confusion is. Okay, the market is currently sitting at 44.88, right off of 44.50 there. Okay, but it's sitting at 44.88. Well, if I go in and I sell one of these two contracts right here, the market is at 44.88. I'm selling higher. Look at the price, 44.95. I'm selling higher than the market, 44.95. Okay, right here, 44.95.8, 44.95.7. So I'm selling higher than the market. So if I am able to buy the market at 44.88 and sell the market at 44.95, I make money, right? I mean, that's how it works. Okay? So let's just say the market settled at 44.90 because that's the floor of that spread. Okay, or lower, but let's just say it sells at 44.90. So if I sold at 44.96 right now, and the market settled at 44.90, which means in essence I bought it back. Okay, that's what settled means. So if I bought it back at 44.90, then how much would I make? Well, if I sold it at 44.96 and I ended up settling out at 44.90, I made 6 points. Why? Because I sold 6 points higher, 6 points higher than the market. And that is so huge. I'm selling 6 points higher. So if I sold the market over here if I sold it at 44.96, okay, and I went short right there, and the market ended right here at 44.90, then I'm going to make the difference. Now, it can't go lower than 44.90 on its settlement because that's the floor of the spread. Now, if it does go lower, does that mean I don't make any money? No, it means I make the maximum profit. I make all 6 points of profit. Okay? So I still make that max profit. If it goes higher, well, then I make 1 tick less for every dime, basically, because it ticks in dimes. You can see how there's a little 0.1, 0.2, 0.3, okay? So every 0.1 higher than 44.90 expires, I make $1 less than my $60 profit. Okay? Which is pretty sweet. All the way up to 44.96, where I'll be break even on the trade. Now, what if I go down here and I buy one of these contracts? I thought I had the live open. Let me open that up. Okay. Okay, so if I buy one of these two, or I sell one of these two, why do I say one of these two? Because both of them have the same ceiling on the buy side, 44.90, same floor on the sell side. Okay, now let's go ahead and let's do a quick side lesson. Which one would I choose? It's pretty easy. They have the same amount of profit. I mean, give or take a buck, or 2 or 3 here, but it keeps oscillating. Choose the one with less risk. Okay, now we're not going to risk all that money, but worst case scenario, some crazy spike comes out, some Fed head makes some stupid announcement, whatever. Obviously, I want to have as little exposure on a worst case scenario as possible. So I can get $64 on this one or so, get 68 on that one. For $2, I can take on $100 less risk. Okay, I'll give up the $2. All right, same thing down here. Looking at $60 to $62, $61, difference right there. And again, about $100 less risk. So I'm going to choose the one with the less risk, whenever I'm choosing the Iron Condor. Okay, the important part, though, is to make sure, is this even remotely a good idea? So we are getting premium. I like that. I like how, wide it is. That's a decent amount. But is it a good idea or not? Let's go over here. And let's go. What time is it? It is 12:45. Okay. So what I'm going to do is I'm going to go to 12:45. I'm going to go, hey, how much time does that give me till expiration? So 1:45, 2:45, 3:45, and I have 3.5 hours. That's going to make that 210 minutes. Okay. We're going to set our offset back to 0 just so we can make it really easy to adjust it. Okay. And once that populates, we're going to adjust our offset. We want our offset to start at 12:45. It started at 12:30, so we want to push it back just 15 minutes. Okay. Go back to that expected range. Let's change that offset to 15. Hit OK. All right, so now, I mean, it's a little bit bigger box than I might have expected. I don't know about you, but it's pretty big. Problem is, this box is about to be over. And look at the expected movement here coming up in the bottom of the hour. Okay, so here in like just a couple minutes, we're going to be at 12:40, like in 1 minute. What's going to happen is this little box is going to become the main box. That is a fantastic Iron Condor. Okay? So now obviously implied volatility is higher than normal. There we go. Now we got our final condor plotted right there. Okay, that gives us a little bit wider, but still not that wide. So let's look at it and let's do the calculations. Okay. We'll walk it right there. And I'm going to give you the shortcut math. Okay. Once you know the premium, we basically have about 100, 10 points, a little over 10 points. Okay, so $100 every buck every $10 is a point. So we got about 10 points up and down that we're at break even. That means the premium built in basically expects a move from 44.90 up to 4,500. Okay, or down to 44.80. So let's look at that. Okay, so again, we're getting $5 on either side. Okay, so if I make $5 on one side, Then bring that on up to the other side over here. And that basically means 10 points. So we got about 10 points of upward movement, 4,500. We got about 10 points of downward movement, 4,480. So that's giving us our implied volatility versus our historical volatility. Okay? Implied being the premium, historical being the expected range. So 4,480 to 4,500 gives us a nice 20-point range on the trade. Okay? Now remember, I'm showing right now expected range, but also we have more than expected range. We have expected close to close. Okay? So if we go back over to that range to range, let's see here, we can go in. We can add it again. And we can say, instead of high to low, I want to see close to close. And I want to see that with, 15-minute offset, 210 minutes. And click apply. And 210 minutes basically being from now until expiration. I can shrink these down. And here's the main thing I can see. One, I can see that expected volume is much lower than expectations. I like that. Okay. I can see that my close to close is within my break-even range. It's actually a profitable zone. So anything inside this range, I make $1 the closer I finish towards 44.90. So I know how far it could move out. That's sort of the expected move, but even look at this one. Even look at the last hour with the big moves. We're sort of staying with this lower than expected volume down here. So that helps me, like high volume, actual volume. So what's the expected volume? What's the actual volume? We're sort of staying inside that close to close. So there's a lot of premium built in here that is completely unnecessary. And so let's put it in our pockets. That's the idea. So if we're going to do that, we're going to go over here and we're actually going to choose which contracts we want. We want those cheaper contracts, okay? And notice this isn't like some high stress, you got to place it in 5 seconds or it's all over trade. All right? It's also the way it plays out. And you got to let it do its thing. You can't just sit there and wonder why, you're not making a ton of money in 5 seconds. It's premium, it's time decay. It's got to basically get sucked out of the market, okay? So just understand that it is going to have to, get sucked out of the market, and you're going to have to let it sit there and do its thing. And we could look at some other cool, tips and tricks and everything else on doing this. But if we go in, let's just go ahead and put on our first trade. Remember, this is one that had less risk. So we're choosing these spreads over here that have less risk than the other spread at about the same premium within a couple bucks. All right. So I go in, I pull this one up, and I can do like 5 contracts and sell that one. Okay. And I can go in, I can do 5 contracts and buy the other one. All right, we'll be back right after this break.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All right, so what we've set up over here, we went in and we put on a, an iron condor. We bought below the market. Went over here, we bought at a price of 44.83.6. We sold at a price of 44.96.4. Okay, and that basically gives us a little over a 10-point edge on the market. So it's actually around 12. And so we're able to move up our break-even lines a couple more points, 45.02 and 44.78 right there. Okay, so these now become our break-even zones. The one other thing we might decide that we might want to look at as we're going through everything is we may want to go in and even look at the binaries. Okay, and choose, to see if there are any binaries. And so I don't think we're going to have time, unfortunately, to cover this in detail on this show today. But it could give us a way to hedge off, to talk about how to hedge off these trades on an upcoming trade. And let me go back over. I need to go in here and pull up in Q. There we go. Deselect all those. All right. And you can look at it and you can go, okay, well, how much premium I'm receiving? I'm receiving about $60 on both sides of the trade. Okay, so if I'm getting about $60 on both sides, then I could use some of that to potentially go in and buy some of the contracts that are available on other markets. Okay, so we can go over here. And we can look at what's available. Now, we can do shorter term or longer term. Like if I thought it's about to move, I could do shorter term, whatever. If I go longer term, it's obviously going to cost me more money. But what this shows me right now is that's a 1 o'clock expiration. I probably want a little later expiration than 1, so I can scroll down. And, I see that there's all these different strikes. I'm going to want ones that are ideally going to be closer than these floors and ceilings here. So we're looking right now about 44.92. Not going to do me any good. 44.504. That's not quite at my break even, but it could be an acceptable strike if the price was right. The price right now is not right. Okay. We can go down here and we can look at the 44.77. So 44.68. Still, price is a bit too expensive to try to pull off a 4.15 expiration. Now, what would normally happen would be I would do this like at night, and then in the morning or in the afternoon, if the market was still sort of flat, I would hop in, and then I would put on like an end of day. If I was worried about maybe some end of day volatility, I could also go, you know what, the market's not moving yet. Is there anything I can do to hedge off right now, just in case the market takes off? Well, this one only gives me a few minutes, so that's not going to be worth any money. This one gives me an hour and 2 minutes. So remember, I got $60. So I could go in, I could decide to risk some if I wanted to. And by say risk, I mean basically give up some of the profit that I'm making already, if I think it's worth it. So I can go in here, I could risk like $7 of my 60 on my buy side. Okay, if I went in and got that one, I could go down here on my sell side around 44.85 or so, and I could risk $7 over here. That would be one way to look at potentially hedging off the trades, or even down to 44.81 there. So we'll talk about binary hedges on Condors next week, but hopefully you're getting the idea that you can use some of that profit on near-term expirations to hedge off, just in case there is some big spike in the market. All right, up there. We'll be back after this break.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.